Alright, what's up guys? I hope you're doing well. James here from jamesforsythe.com. A few months ago I went over the results for the Federal Reserve stress test, right? Where they do basically like balance sheet analysis and other analysis in general on major banks that are basically systemically important, right? And they really measure to see whether or not they could handle I think it's a global market shock, and then also counterparty default, right? So if basically global markets just took a massive downturn, would they be okay? And also, do we have to be cognizant of this specific bank um, being defaulting and having their counterparties default, right? Um, so I talked about that, and I'll link that in here so that you guys can find that video as well, just so you can know. But I also found, and I didn't know this, and one second, I forgot to switch over. Here we are. Found another press release that basically, and I didn't know this about the stress test. So after they do that, sometimes they'll actually change the capital requirements for larger banks, right? And so basically, they have different tiers of capital and they kind of structure it differently in terms of like there's a minimum capital requirement and then there's a factor that's based off of, I guess, the stress capital buffer, as they say. And then there can also be an additional, like, as they say, capital surcharge on it for G-SIBs, so like global systemically important banks, right? And so I think there's multiple components, kind of like different types of premium in what insurance or whatever, um, for the requirements. And so, like the minimum capital requirement is the same for every single one, and it's 4.5%. And then I'm assuming this is for tier one capital. And then the stress capital buffer requirement is determined from those stress test results, and it says that it's at least 2.5%. So it can be more, right? And then also there's a capital surcharge for these G-SIBs, and that's apparently updated in the first quarter of every year. And it says to account for the overall systemic risk of each G-SIB. So very specific. And so I didn't realize that basically these capital requirements for large banks, it's specific to like they look at each individual bank and go from there, which I didn't know it was that specific. I guess it kind of makes sense because I know like Federal Reserve has examiners that basically their whole job is to be on site at the banks at all times, right? Or at least when they're open, is what I mean, right? They basically have an on site examiner, I guess. I don't know, or supervisor or whatever from the Federal Reserve, depending on how large the bank is. And so, like, and then the firms, it seems, can also request consideration or reconsideration, I should say, from the stuff. So, like, it looks like Bank of America did it, and then Huntington Bank Shares Incorporated did that as well. Um, I don't know. I just wanted to come on and share because I didn't realize like how they structured the different types of capital requirements, which I thought was interesting. And so this was just a press release that happened about a week ago, August 4th. And so from there, it's also all these effects are or any changes in the capital requirements are effective on October 1st. So it'll be interesting to see how that kind of changes and kind of looking at other press releases to see what kind of manifests from that. But I just wanted to hop on here really quick and share it. So anyways, I'm going to leave that there. So I hope you guys have a good night and I will see you on the next one.